You can't just buy a stock and watch the stock go up, and then all of a sudden, because it's up, you don't feel like buying the stock anymore. It's okay to ruin your cost average because you're going to make more money. And what I've really come up with is the portfolio that I created. It's the $250,000 portfolio that I created in 2022. That one, I'm thinking maybe that's the YouTube portfolio, right? And then I have my own personal portfolio, which I'm not going to show. So the YouTube portfolio is fairly new, 2022, but I feel like the portfolio is starting to mature. It's building itself out. It's almost up to 300K right now. So it's a decent sized portfolio that I think if I show it, it'll kind of represent what I am as an investor, right? It's different from my personal portfolio, but there's a lot of similar positions. So I'm going to show that on the screen. And you've noticed there are some positions that are blacked out. Those are positions that I don't feel like they're smaller cap companies. They're riskier companies in theory. They can move up crazily or move down crazily. Those are companies that I've blacked out. I'm not going to show my options. These are just my top positions. These smaller positions, I don't really feel a need to show because they're small positions. But yes, this is my portfolio. And you may notice looking at it, if you watched my Crocs video from many months ago, that my Crocs allocation is bigger. In my old video, I talked about how I have a 2.5% allocation to Crocs. Right now, the allocation is up to 6%. So that's almost like I've more than doubled the position. Overall, when I was thinking about my investment in Crocs, before the earnings, I bought more because I was looking at it and I was feeling fairly bullish. So I was like, okay, you know what? I want to buy more Crocs. I want to be more exposed to this idea. And that's something that I need to say. This is kind of off topic from the video, from the Crocs analysis, but I need to say this as investors. Some investors, we struggle to average up on our positions because what I want to show, like I just showed you my portfolio, right? Like all those positions there, my cost average is one of the things that I want to show. If I have a lower cost average, it makes me look like a better investor.
Yes.
And that's what a lot of YouTubers are doing right now. You know, you'll see some YouTubers, they have like a low cost average and that's what they show. And they're like bragging that they're a good investor. But then like I'm seeing some YouTubers, like if they really believed in that idea, they would be averaging up.
Yeah.
They'd be buying more. You know, they'd allocate more to it. And that's what I'm doing with Crocs. And I think like it will make my cost average look worse, but I'm making more money. So to me, that's more important, right?
Yes.
But I guess to other YouTubers, it depends because some YouTubers, they make their money from views and from their selling courses and they lose money from investing. I don't make money from YouTube. All my money I make is from actually investing. So it's a different angle and a different approach. But as an investor, as a viewer, I say if you have a company and it's performing well, even though it will hurt your cost average, you should be averaging up on those companies because that's how you make more money. You can't just buy a stock and watch the stock go up and then all of a sudden because it's up, you don't feel like buying the stock anymore. It's okay to ruin your cost average because you're going to make more money. Thanks for watching a short clip of The Financial Doctor Reacts. To see the full episode, click over here. And to see my next upload, click over here.